Good morning, everyone, and thank you for being here today. I'm excited to kick off this presentation titled Top Performing Mutual Funds in India. We'll be exploring the highest performing mutual funds based on data from the past 1, 3, and 5 years. This session aims to provide valuable insights for retail and semi-professional investors who are looking to achieve superior returns. Over the next few slides, we'll dive into detailed analyses to help you make informed investment decisions. Let's get started. Let's take a closer look at the performance analysis framework. Starting with the one-year returns, this gives us a snapshot of recent momentum and how the market is currently positioned, both globally and domestically. It helps us understand the short-term trends and the immediate market sentiment. Moving on to the 3-year returns, these reflect medium-term consistency. They show us how the investment has performed across different market cycles and economic conditions, giving us a sense of its resilience and stability over a few years. Then, the 5-year returns focus on long-term wealth creation potential. This timeframe also serves as a validation of the fund manager's expertise in navigating various market environments. What's important to note is that each of these timeframes highlights different strategies and opportunities. Short-term gains might be driven by momentum, while longer-term returns emphasize the strength of a well-managed, consistent approach. By analyzing all three, we gain a comprehensive view of how the investment performs across different periods, helping us identify strategies that truly deliver exceptional returns over time. This holistic perspective is key to making informed investment decisions aligned with our overall goals. Let's take a look at the one-year performance leaders. This slide highlights the top performers over the past year, showcasing those who have excelled in their respective areas. These leaders are key examples of the success stories that align with our overall goal of continuous growth and improvement. By understanding what drove their success, we can identify best practices and strategies that might be applicable across the organization. It's important to recognize these achievements not just as individual wins, but as part of the broader effort to elevate our collective performance. This focus on top performers helps us set benchmarks and inspires us all to aim higher in the coming year. Let's take a closer look at some of the key themes that have driven short-term gains recently. First, consumer trends have played a significant role, accounting for about 50.79% of the gains. Invesco's focus on global consumer markets has allowed us to tap into emerging opportunities, especially in regions where consumption habits are rapidly evolving. Another important factor is our exposure to China, which contributed around 41.64%. Greater China equity funds have benefited from the region's economic recovery, highlighting how regional growth can have a substantial impact on performance. Overall, international diversification has proven to be highly rewarding over the past year. Thematic and regional funds, particularly those focused on Asia, have outperformed domestic strategies. This underscores how post-pandemic recovery patterns and shifting global consumption habits are shaping investment opportunities. These themes, consumer behavior and regional growth, are central to understanding how global markets are evolving and how we can position ourselves for continued success. Let's take a closer look at some of our 3-year performance champions. First, we have the Invesco India Mid-Cap Fund, which has achieved an impressive 32.32% annualized returns. This reflects their consistent and skillful mid-cap stock selection, demonstrating their ability to navigate and capitalize on mid-sized companies' growth potential over time. Next is the Global Consumer Trends FOF, with a sustained performance of 31.37%. What's notable here is their ability to deliver steady results across multiple market cycles, showcasing resilience and adaptability in a dynamic global economic environment. And finally, we have the Bandhan Small Cap Fund, which has achieved 31.32%. Their strength lies in exceptional small-cap stock picking, highlighting their expertise in identifying promising small companies before they become mainstream winners. These funds exemplify the core theme of our presentation: consistent, skillful management that delivers strong, reliable performance over time, regardless of market conditions. When we look at the domestic expertise over the medium term, the 3-year performance really highlights the strength of Indian fund managers. They've demonstrated a keen ability to identify undervalued opportunities within the domestic market, especially in the mid-cap and small-cap segments. These are areas where active management truly makes a difference, helping investors capitalize on hidden value that might be overlooked by more passive strategies. It's also interesting to see that about 60% of the top-performing funds are domestic equity funds. This indicates a strong local knowledge and insight that gives these funds an edge. On the other hand, about 40% are international or thematic funds, which also play a vital role, but perhaps with different strategies. Overall, this slide underscores how domestic expertise remains a key driver of performance, especially in the areas where active management can unlock significant value. It ties back to our broader theme of the importance of understanding local market nuances to generate superior returns. Let's take a look at some of the top performers over the past 5 years in wealth creation. First, the Motilal Oswal Midcap Fund has achieved a remarkable 31.38% CAGR, showcasing how consistent midcap investing can generate solid value over time. This highlights the potential of mid-sized companies to grow steadily with the right strategy. Next, the ICICI Infrastructure Fund has delivered a 30.41% CAGR, reflecting how a long-term focus on the infrastructure theme can pay off, especially when executed with a clear vision. Infrastructure remains a key sector for growth, and this fund exemplifies successful thematic investing. Then, we have the HDFC Infrastructure Fund with a 29.4% CAGR. Its strength lies in sectoral expertise and timing. Knowing when to enter and exit opportunities within infrastructure has clearly made a difference here. Moving to smaller companies, Bandhan Small Cap has achieved a 29.35% CAGR, demonstrating sustained outperformance in the small cap space. The ability to identify and hold promising small companies can really boost overall wealth over time. Finally, the SBI PSU Fund has posted a 29.17% CAGR, capitalizing on the revival strategy of the public sector. This sector often offers growth opportunities when aligned with government initiatives and reforms. Overall, these funds reflect the importance of a disciplined, sector-specific approach and the power of long-term investing. They connect directly to our theme of strategic wealth creation through careful selection and patience. Now, let's turn our focus to infrastructure, which continues to be a long-term winner in our investment landscape. As you can see, 2 out of 5 top funds are dedicated specifically to infrastructure development. This highlights the sector's growing importance and investor confidence. Looking at the 5-year performance data, we see clear evidence of infrastructure funds delivering exceptional long-term returns. This isn't just a short-term trend. It's a reflection of India's massive push towards infrastructure development, which creates sustained opportunities for growth. Funds like ICICI and HDFC Infrastructure funds exemplify how sectoral specialization can make a real difference. Their targeted approach, combined with patient capital deployment, meaning they're willing to hold investments over longer periods, has enabled them to generate superior wealth creation over time. Overall, this underscores a key theme of our presentation, that investing in sectors aligned with long-term national growth stories, like infrastructure, can be a highly effective strategy for building wealth over the years. Let's take a closer look at the key performance patterns across different timeframes. Starting with the short term, which is about 1 year, here, we see that global themes and international exposure are leading the charge, accounting for nearly 51%. This indicates that in the near term, investors are increasingly looking beyond domestic markets, focusing on global opportunities driven by international trends. Moving to the medium term, around 3 years, a more balanced picture emerges. Here, we see a mix of domestic mid and small cap funds along with international investments, delivering over 31% returns. This suggests that a diversified approach, combining local expertise with international exposure, can be quite effective over this timeframe. Looking further out to 5 years, infrastructure and PSU themes stand out as consistent wealth creators. They've shown resilience and the ability to generate steady long-term growth. What's interesting is that this diversification across different timeframes reveals different winning strategies. For momentum, global themes tend to perform well. For stability and consistency, domestic mid and small cap funds are reliable. And for long-term wealth building, infrastructure plays a crucial role. So, understanding these patterns helps us align our investments with the right strategies depending on our time horizon and goals. Let's talk about investment considerations as we wrap up. First, diversifying across timeframes is key. This means combining global themes that offer growth potential with domestic expertise that provides stability, and including infrastructure investments for long-term wealth creation. It's about creating a balanced approach that navigates different market cycles. Next, it's important to monitor consistency. Funds like Invesco Global Consumer Trends, which appear across multiple timeframes, demonstrate sustainable performance. Watch for these signs of resilience, as they can indicate a fund's ability to perform well over time. Finally, consider your risk profile. Higher returns often come with increased volatility, so it's crucial to align your fund choices with your investment horizon and risk tolerance. Remember, the goal is to build a portfolio that not only seeks growth, but also matches your comfort level with market fluctuations. All these points tie back to our overall theme. Thoughtful, balanced investing is essential for long-term success.